Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you enjoy the program, give us a like, subscribe, let the algorithm know. My guest today is Benedicte Nolens. She is head of the Hong Kong Innovation Hub at the Bank of International Settlements, which is doing groundbreaking work on researching central bank digital currencies. I spoke with Bene about their latest paper titled Project Aurum that looks at both retail and wholesale CBDCs, both for Hong Kong and the world. Benedicte Nolens, welcome to DigFin VOX.
Hello, hi Jamie. Thanks for inviting me.
It's great to have you here. I'm very interested in the work that you're doing at the Bank of International Settlements, the Innovation Hub in Hong Kong. You have been working tirelessly on issues around central bank digital currencies and just released a paper on a project called Project Aurum. What's that all about, and why are you excited about Project Aurum?
Thanks a lot, Jamie. So Aurum stands for, it's the Latin word for gold. And it is the project name that we gave to a central bank digital currency project in the retail space. So obviously, central bank digital currency, what it is, it's in the retail space specifically, it's about the question of how do you make, for example, banknotes and coins as you know them today, how do you make them digital? And will they be better if they're digital, right? So our thought was they can only be better if they're secure, right? So we used the word gold as the analogy for the need for these kind of tokens to be highly usable and highly secure. And so, yeah, go ahead.
So our money is already electronic in that sense, but using the traditional infrastructure. In Hong Kong, we've got the faster payments system, FPS, which, like many other countries or jurisdictions, has introduced real-time or almost instant domestic payments. If I've got FPS, why do I need a retail CBDC?
Yeah, so it's a very good question, and I would say that even the HKMA has been quite clear about the fact that no decision has been made necessarily around whether Hong Kong will implement a retail CBDC. And just so you know, in parallel, we're also looking at wholesale CBDC, and just in the last 3 hours, we just released a report on that as well. So, but Hong Kong in the retail CBDC space has equally, though, already issued 3 papers, 3 Hong Kong dollar papers, each of which are linked in the Aurum paper because they are foundational material to the Aurum infrastructure decisions that we made. And within it, the HKMA makes very clear that they do think, notwithstanding no decision having been made about a rollout, that it is incredibly important that Hong Kong understands what CBDC is and does the proper applied technology research. And I would say that's where Aurum fits in. And I would add that in that regard, Aurum is quite unique, I would say, and avant-garde. It's unique because it's looking at 2 infrastructures. So normally when you look at the CBDC project, it's actually looking at typically 1 infrastructure, or architecture, so to say. And in this Aurum report, we set out the 4 possibilities. So possibility number 1.
The double architecture, one is wholesale and one is retail. Is that what you're referring to?
No, actually here I'm referring to the fact that one token is an intermediated CBDC, the other token is a stablecoin. And yes, the architecture of the system is to have a wholesale interbank system that is actually separated from the retail system. And by that separation, we do also create more cybersecurity. But for this purpose, yeah, even that is unique, as you're saying. But I think what is more unique is that it's currently testing 2 very different types of retail CBDC tokens. So that one intermediated token, what it means is it is central bank digital currency, meaning it is the liability of the central bank, and it is distributed through the banks. Whereas the stablecoin, the difference is it is a liability of the bank backed by reserves at the central bank. So a backed stablecoin with CBDC reserves, which hasn't been done before, that's completely unique. But the liability is ultimately on the bank, right? Now, with the architecture that has been built, the tokens can be traced even in bankruptcy. So if you're holding these tokens and let's say the issuing bank of these tokens goes bankrupt, you will have the central bank as standing in. So in both cases, they're equal, you could say, in their value in society. But the way they're implemented is very different, because in the one case, it's coming direct through the central bank system. In the other case, it's issued by the banks. And the reason we wanted to look into this stablecoin structure specifically as a bit of a test, and as I told you, applied technology research, is because we want to see if the banks see that stablecoin version as more flexible for programmability. So I cannot answer that question to you today, because that's going to be the next stage of this investigation, is to now open up this architecture to the banks to a little bit play around with and give us their perspective of if they needed to make a choice, which one prevails over the other. And as I try to say, these two are actually two choices of 4 choices that we set out in the report. So just maybe to quickly go through this, because it's important. People started with this concept of a CBDC that is directly issued by the central bank to you, Jame, as a retail person. The problem with that is that the central bank would need to do your KYC, right? Which central banks don't traditionally do. They delegate that task to the banking sector and to the PSPs, the SVFs in Hong Kong. They know you, not the central bank. So it's not the task they do. It's not the task they may want to do for that reason. And it's not the task you may want them to do, because you may want your privacy to be kept in the private sector, the banking sector and the PSPs, as opposed to at the central bank level. So the direct CBDC is something that was put out there as a concept 2 years ago, but very few jurisdictions are now actually doing that model or choosing that model. So the more preferred model they're going for is a hybrid CBDC or an intermediated. Now, the distinction we at least theoretically make between these two is in the hybrid, it's still the central bank that manages the whole ledger, meaning they can still see Jame is Jame, right? Whereas in the case of the intermediated CBDC, which we actually chose for this, the link is there broken. In some, the wholesale system has no information that links this token to Jame. But the SCB, for example, can obviously see the token through the chain of transactions and knows where the token has gone.
SCB in this case being Standard Chartered Bank,
for example, or it could be HSBC, it could be any commercial bank. Correct.
Do you think that in Hong Kong, because of our, I'd say fairly unique situation where we do have 3 banks that already act as currency issuers with a HKMA backstop. So my paper money has
exactly
or a BOC or a Standard Chart emblem, they are the issuers. You don't have that in other jurisdictions that I've encountered. So is that informing some of the way that you have, and working, I guess, with the HKMA or the banks have been sort of thinking about this?
Yeah, so it definitely has, because at the time we started this work, in fact, there was still a lot of questions around stablecoins, as you know, right? So in some about, we started this work early last year. So early last year, there was a lot of global policy discussions around whether stablecoins are stable, right? And so you've seen, meanwhile, the collapse of Luna. So let's face it, some stablecoins are not stable, right? But there is a range of stablecoins. Luna wasn't a very good example there.
And also, it's based on just mathematical gamemanship with the algorithm, as opposed to having reserves. Then the next question is, reserves, right? Like what are these reserves and how do you prove it?
Exactly. So even among private sector stablecoins, there is the Luna example, not a good example. And then there is those that are backed by assets in a bank. But that's still bank counterparty risk, right? So if that bank goes under, then technically your stablecoin is valueless if it's backed by assets in that bank. So what this stablecoin structure tries to do, as you say, is mimic exactly the current note issuing function of the 3 note issuing banks. They are issuing those notes and they're backed with reserves at the central bank. And so this is a digital, the stable coin. So option number 4 in the structure of the BIS options is actually the closest to the Hong Kong current model. So it's replacing that physical bill issued by the note issuing banks by a stable coin issued by the note issuing, or in that case, stable coin issuing banks.
How relevant do you think your work in Aurum is for other jurisdictions? Is it kind of tailored for our market because of these characteristics that we've mentioned? Or do you think there's things that can be taken away in other places and they could take a Hong Kong-esque inspiration or technical blueprint to other places?
Yeah, so I think, to go back to your question, the separation between the interbank system and then the wallet already is something that is worth for other jurisdictions to look at. Then the interbank system in this system is a DLT system as opposed to being a centralized system. Now, other jurisdictions can study these 2 models, so they could take a look at our code, because we will open this code up to the central banking community. So the BIS has 63 central bank members that are allowed to access this code. So they can contrast and go take a look at some of the options, of course, also offered by vendors in terms of centralized models, and contrast this with this DLT interbank system. They can contrast, as I said, the direct CBDC with this intermediated CBDC. So the intermediated CBDC is what highly likely a lot of jurisdictions are ultimately going to choose as the model, because it protects the privacy of the customers, as I told you, because your information stays where it is today. Is equally private or equally non-private. If you think that a bank can't be trusted, it's not private. If you think a bank can be trusted, then it's private, right? So the intermediated model is exactly the same as the current system. The stable coin, the learning there, in my view, for why it can also be very useful, in fact, really useful for global studies, is because A, it's unique, it hasn't been done before, and secondly, that backing by CBDC is what makes that study here unique. Because, as I said before that, what you had is those algorithmic tokens, as you know, one blew up, and then you have those backed with money in a bank. But you don't have those backed with money at a central bank, the reserve backing. That's unique in Aurum.
What is the level of, I guess, distribution in your distributed ledger technology that you're basing your studies on? Like, is it just a club with a couple of banks? Is it really DLT? Or is it something that leverages a broader reach to create something that looks, begins to look more like an Ethereum or something out there in the public permissionless sector?
So the answer is it's a DLT and it's not a public blockchain. So yeah, that is a choice made. And that's because ultimately there is a need here to comply with many things, including the AML aspects, right? So you want that CBDC to circulate only in approved wallets, and that's how this infrastructure is set out. So okay. Yes, it's not, if you're asking implicitly whether this is comparable to cryptocurrency, I always caution to compare these two, because a cryptocurrency is by nature made to be circulating very freely in the universe, right? But it also has AML risk to it, or in some it may not be AML compliant, to put it very simply. The other thing to point out, and it's something that dawned on me much more recently as a customer myself, is it's not just about AML, but it's also about fraud protection. So if something can circulate very freely without KYC and all of that stuff, the fraud risk actually also rises in tandem. So in sum, if you get defrauded, very unlikely you'll get your money back in a completely un-KYC'd and unregulated system. So there's a trade-off to be made in the choice, but yeah, I think it's sometimes a bit dangerous to compare them, because they will not serve the same functionality if, as you imply, they're built on different technology.
What is the interoperability? I hate that word because it's so clumsy, but it is sort of like the key word for a lot of these things. If I wanted to take my e-wallet, my EHKD or other currency, and then I travel or I want to exchange it for something else, is that going to be possible in this world? What will the cross-border aspects of this look like, do you think?
So I have to answer with 2 other projects for that. So no kidding. No, actually, so for typical wholesale payments, being payments made through the banking system, we actually do have indeed the Enbridge project, which is a wholesale payment infrastructure. So the idea is that banks join a platform on which central banks are also on the platform. And the central banks, at the request of the banks, issue CBDC, wholesale CBDC, so that the payments can indeed be instant on the platform. So, and cross over to the other part of the world very efficiently, and without the need actually for these correspondent relationships, which are dwindling in number and in coverage. So that's one aspect of CBDC, of cross-border CBDC, but you would say that's in the wholesale context, right? Whereas you were just asking if me, Jame, if I go travel to Thailand, right? So we do have another project for this called Icebreaker. So you can take a look. It was just announced about a month ago. And it's not handled out of my center. It's currently a collaboration between Riksbank and Israel, and also the European Center. And their people are looking at that exact question, is how do retail CBDC wallets interoperate in the future? Within a Hong Kong context, this has been brought up as a question, because often, for example, Hong Kong people do go travel to Thailand, and they would like to have maybe a Thai CBDC in their wallet. So it's a completely legitimate question. I think it's maybe a little too early to answer it, and the reason is because until we decide on our own retail CBDC architecture and model, it's too early to actually decide how you're going to interrelate with the other. But just to go back to Enbridge, Enbridge is something that, on the other hand, I consider interoperable by design, because what it does is it brings central banks together on one platform. So you're on one platform, so you're interoperating your CBDC by design.
I want to go back to my original question about why this versus other advances in payments that we're seeing in the region. So I asked about FPS, for example. But also in Southeast Asia, we're seeing a number of countries are allowing their citizens to basically interoperate with their own currencies through QR codes, right, and an app. So a person in Singapore can go to Thailand, and they don't really have to do any conversion. They can just use their SingPass and operate as if it's bought, and vice versa. And I believe this is being extended across a number of marketplaces there. So we've got these other initiatives in the fintech space that are doing, useful things. So with CBDCs, what's the pace that you're looking at here? Where's the point at which these things become overwhelmingly useful, whether it's the programmability or other functionality, that they will gain real traction and real critical mass?
Yeah, so I think, let's say I'm never under any illusion personally personally that change comes fast. I've been around too long. So I think it would be a bit of an illusion to think that these things come fast, and even if they come fast, that they suddenly take over by storm of sorts. I really don't think so. And in fact, I think that if you look at the evolution of finance, and that's where you're an expert, it's always about multi-step. So you're speaking about the QR codes, but I remember 10 years ago, I didn't have a QR code, right? And 10 years ago, I didn't have a faster payment system in Hong Kong, right? What I did have, though, is my Octopus card, right? And I still use my Octopus card. And what I did have as well is cash, and I still use cash. I did also have credit cards, and I still use credit cards, but I also use the QR code. And maybe in the future, I also want my money to quickly cross borders through, let's say Standard Chartered shooting these amounts to another side of the world quickly, more quickly than in the current scenario, right? And as you say, the private sector is innovating and should innovate, and it will continue to innovate. And if it innovates to an extent that these public infrastructures are not useful, that I would think is to a certain extent even a good outcome, because ultimately it is the user who decides as to what is useful for them, right? So I think it's fair competition, and as far as I can see, ultimately where things end up is that you end up in a world where you have multi offerings existing in tandem. So I think that's been the story in general of the last maybe 20 years of your and my life, right? Choice has everywhere come to our life, in every aspect of our life. And so I think it is for finance as well, is there's going to be more and more options for you. But ultimately, the ones who survive are the ones with the highest adoption. And the highest adoption is always defined by the highest, ultimately by the highest user value. So again, I don't think there is something exclusive of one over the other. And I think we should all innovate in tandem and see which one ends up being the more useful. I would add as well that on your FPS point, for retail, I think this is very critical. I think Hong Kong, a lot of people may not appreciate this when they're not in Hong Kong, for example, but I've been here 25 years, and to me, I've had my octopus in my life 25 years, and I found it for 25 years equally useful as today, for example, right? So, but the FPS system, yeah, it's absolutely amazing that you can just go on your bank interface and the money is with you in a second, and now you don't even need to go through the bank interface anymore, and it's with you in a second. All of this over those 20 years has materially changed. So one of the projects we also have in the BISIH is to connect regional FPS systems. That project is handled out of Singapore and is called Nexus. So that would be another solution to the problem, you see, is to connect these already very well functioning FPS systems.
Yes.
And that could be particularly useful, as you say, for the retail context and for the remittance context.
What do you hope to see in the next year when it comes to further study and advancement on the retail or the retail/wholesale architecture for CBDCs?
Yeah, so I think on wholesale, we just, as I said, issued an Enbridge report just 3 hours ago. We did the first, you could say, global real value pilot on platform. What I mean is there was actual settlement of actual corporate transactions on the platform. So 12 million CBDC was issued amongst 4 jurisdictions. 20 commercial banks participated. A total of 163 payments was made through the platform, and these were real value payments. So a corporate needed to send money from Hong Kong to China, or from China to UAE, or from Hong Kong to Thailand. So, and in total, even amongst these 20 banks in 4 jurisdictions, this platform enables, what it really enables is 150 connections, of which more than 40 connections were established out of nothing really in less than a month. So the let's say the interest of that kind of a pilot is really in seeing how quick networks would form and how quick the network effect, and if you grew that out on a more global or a more regional level, what value that would add. So I think in sum we will continue that exploration, and I think it could be quite significant if it is successful. That's on wholesale CBDC. On retail CBDC, several countries have rolled it out. Your question on Hong Kong is very specific to Hong Kong because we have a very efficient FPS. We have a very efficient, as I said, wallet system, QR code system now with PayMe, etc. But many countries don't have that. We're just thinking about the crème de la crème, which is the highly developed, highly included. So for the much lesser developed and the much less financially included countries, that's where I'm seeing more adoption and much faster adoption of retail CBDC. So you see that, for example, Bahamas, you see it in Nigeria. So it's very interesting. So for wholesale, it's the hubs like Hong Kong, Singapore. They're looking at this wholesale context because that's their job in life, is to connect wholesale across the world. Whereas for countries that are facing financial inclusion problems of individuals, they're faster at retail adoption, retail CBDC adoption. And so the key there for people to understand is that the difference between the banking system and, let's say, a CBDC there for financial inclusion purposes is that you don't need a bank account to have that CBDC. Much the same way that today you don't need a bank account to hold a bill or a coin. And that is very important. And then what is the potential difference then of automating that is that you can much easier track the credit record of that person. And credit to me is a bit like a virtuous cycle. It's if you see a lot of transactions go with a person, then that person's credit starts improving, right? That link you cannot establish with physical cash because you can't track it, right? So the inclusion element is you don't need a bank account, much like cash. But the additional inclusion element is the ability of establishing a credit record much easier in a digital cash context than in a physical cash context.
Right. And if you're able to maintain some level of privacy while you're doing that to give people confidence in using it and just protect their basic liberty,
exactly,
and then it can start. And then you might have some programmability on top, say distribution of pensions or something like that.
Absolutely. So there's definitely a lot of programmability use cases in social security, in COVID, and in any types of contexts like that. But again, they may not be directly relevant for one market and very relevant for another.
Right. And obviously, along with privacy goes a sense that people don't want governments sort of using their digital cash to make them do things or not do things.
Yeah, so I think privacy is very significant. So to go back to Aurum, actually, as I mentioned to you, so the intermediated model is already much more private than the two models above. And on top of that, in the wallet, the system that is being used is the UTXO system, which is actually the same mechanism as Bitcoin, which is, as people call it, pseudonymous.
Great. I think we'll leave it there. We've had a long discussion. There's a lot of exciting stuff. I think we're in the middle of something. We're not the beginning, we're not the end. So I think we'll maybe just leave the discussion also in the middle. Benedicte Nolens from BIS, thank you so much for joining me on DigFin VOX.
Thank you so much, Jamie. And I'll see you next week at FinTech Week.
Okay, good stuff.
Thank you. Take care. Bye.